Hi there and welcome to this edition of Money Talks, where we take a look at all aspects of the rural economy as it affects you in the ag sector. Well, it's been another busy week. The rest of the Eurozone has hauled Greece back from the economic abyss, but at huge cost. The British election has ended with a hung parliament, and at time of recording, David Cameron was forming a coalition government. The UK's direly indebted economy desperately needs firm government right now. And closer to home, the Prime Minister's announced a shot in the arm with the injection of $225 million into research and development. But first up, it's ASB's rural economist James Shortall with his expert opinion on our market update. So, James, another interesting week in the markets, I guess. Firstly, a look at what's happening globally. We can't really go past last week's historic stock market plunge in New York, which sent international markets into a tailspin, and the Dow Jones average down by nearly 1,000 points. What actually happened there?
Well, they're trying to work out exactly what did happen there. Initially, there was a bit of speculation that it might have been a fat finger, and one of the traders actually entered in a trade for 14 billion shares instead of 14 million.
Right.
But now the regulators are actually just trying to work out it may have been a computer glitch. A lot of these computer systems do see massive selling off when shares start falling, and that was sort of what was happening with the uncertainty around Europe. So still trying to work out what the issues there, but it was a big drop, 9.2% for the Dow.
From my reading of it, it sounds like there is no human hand involved in a lot of these trades. It's computer to computer in nanoseconds. And of course, they can easily run out of control.
Well, definitely, and I mean the regulators are trying to work out exactly what they're going to do about it, because when things do go into a tailspin, then some of the computers just continue selling and get out of control, and they can these trades happen very, very quickly. So we might see some changes pretty soon. Yeah,
let's hope so. Did we see any flow-on effects on this side of the world from that New York glitch?
Well, the currency, of course, had a bit of a blip, and it traded down, and it's a bit difficult to tell whether that was because of what was happening in the Dow or because what was happening in Europe, because the two sort of happened at the same time. There was a whole lot of things happening in Europe that was a sort of negative for markets in general, and then of course when the Dow started going to this tailspin, then it just compounded that effect, and the New Zealand dollar did drop, and that was the main effects back here.
Yeah. Just looking at the financial regulators who are trying to sort this mess out, they're from the Securities Exchange Commission. Where do these people come from? And will they necessarily have the expertise to sort out what is obviously a highly complex and sophisticated piece of computer technology?
Yeah, well, I guess some of the trading companies, their competitive advantage has been able to trade these shares faster than their competition. So they want to make sure that they have that capability. The exchanges overnight, then they have been meeting with the SEC, trying to work out and put sort of I guess a bit of a click in place that's if it does go into a tailspin, then they can pull out. But of course that when you're fooling around with markets and fooling around with when things are selling, then obviously someone wants to buy when the price is low and someone wants to sell. So as soon as you start tinkering around with the engine room, then they can cause problems. So it'll be a fine line.
And it's not just Wall Street, is it? There are several exchanges like this, the Mercantile Exchange in Chicago and so on, isn't there? So they're all intermeshed, I guess. Yeah,
we've got the New York Stock Exchange, the Chicago Mercantile Exchange, the NASDAQ. There's exchanges, sort of 7 or 8 major exchanges around the US, and of course they all have different flow-on effects and trade different shares and different companies. So they are quite intertwined, and they probably do generally move in the same direction, but depending on what those individual companies are doing.
Now, still in the US, their employment data has just been revealed for the last month, and it's looking a bit more positive, is it?
Well, it's the 4th consecutive month where the labour force has expanded in the US. 290,000 people were employed over the past month, which is significant. And when we look back to 12 months ago, then up to 500,000 people were losing their jobs every month, and that was happening for 7 or 8 months in a row. So now that we're starting to get back to the labour force growing and people employing companies employing people, then that's definitely good news. The unemployment rate actually went up in the US from 9.7% up to 9.9%, which does seem a little bit unusual, but really what is happening is the participation rate has increased. So people are seeing that the economy is looking a bit better, and they've decided, well, previously I haven't been looking for a job, but now all of a sudden things are looking better, so I'm going to start looking again, and that means more people are looking for jobs, even though the labour, more people were being employed. So.
And I guess we could see a similar sort of thing happening here. Now, our employment figures came out last week, which were quite a surprise for economists, with a drop from 7.1% to 6%. This saw quite a bit of movement in interest rates, did it? Yeah,
well, it was a big surprise, and not only was it a drop from 7.1 to 6%, then the previous quarter was revised down from 7.3 to 7.1. So that's quite a, so when we look what happened over the past quarter, then it was a big improvement, but even the quarter before that, it wasn't quite as bad as what we had previously thought. So in general, it's been seen as really positive, and the big increase in interest rates, then we did see quite a sort of about 10 to 15 basis points across sort of 1, 2, 3, 4 and 5 year swap rates, which is the wholesale interest rates. And the reason for that was that the Reserve Bank's been holding off increasing the official cash rate, and they've probably been looking at a few things, unemployment being one of those, and unemployment all of a sudden improved dramatically, much better than probably they were expecting. So now we're looking at an earlier increase.
Yes, I was just going to ask you about that, because I think last week you were predicting that the OCR might go up in July, but what you're now saying it might be June.
Yeah, well, last week things have changed pretty quickly in 7 days, and we were saying July with probably a couple of things to watch. One of those being the budget, which is later on this month. One of those being unemployment, and if things really did change, then we might see an earlier rate rise. And of course, with unemployment changing quite dramatically, then that has meant that markets are actually now pricing in a 25 basis point increase in the official cash rate for June. So the markets are basically fully priced in that increase, and we see no sort of barrier to the Reserve Bank sort of increasing at that time.
Just finally, and very briefly, any of our sectors experiencing more difficulty than others at the moment in terms, say, lamb, beef, dairy?
I mean, when we look at some of the different sectors, then sheep and beef have seen really good international prices, and prices are up sort of 30 to 40%, and dairy are well up over 100%. But they're both dealing with the currency, and of course that is what's hammering the sheep and beef industry, and it's probably going to continue to do that for a little while yet.
Well, thanks for that, James. Next up is economics professor Tim Hazledine from Auckland University, who'll join our panel to discuss the business headlines making the rounds over the last week. Welcome back. Well, it's been a particularly interesting week in the financial world, I guess particularly so if you're a European government. Well, Tim, welcome to Money Talks. But before we get into the meaty subject matter, anything you'd like to add to what James had to say?
Well, talking about meat, it's good to know that meat and other commodity prices for our exports have been strong, and of course you've got to expect that the exchange rate will take some of the shine off that. That's what exchange rates are supposed to do.
Well, firstly, of course, the biggest news over the last week is the unfolding Greek financial tragedy. A support package estimated to be worth $1 trillion+ has just been unveiled. What's actually in this package, Tim, and what does it mean to these European economies?
Well, it's a package of guarantees, I think, mostly. It's not actually...
They're not handing over hard, cold cash.
They're having some, I think, to the Greeks, but most of it, over $1 trillion of it, I think, is guarantees. And so it's sort of writing a big cheque, well, showing everybody the big cheque that you've written out, and then saying we can cash this cheque if we need to, but if the markets believe them, then they won't have to cash it. It's a confidence thing.
Right, yeah. So it's very much driven by markets more than political or government regulation.
Yeah, I guess so, yeah.
There's also some where they have decided to start buying some of the bonds on the open market, so that'll should drive down the yields on the government bonds, and that's what the UK and the US have been doing